Does it feel like your dollar is purchasing less and less by the day? Is the economic data even making sense? And is the steady erosion of your purchasing power putting your retirement at risk? More importantly, what can we do about it? How can investments in safe haven assets like gold and silver stop the bleeding? Gold is clearly on the rise and making historic highs, but how does silver play a part in all this? Seasoned investors understand that when gold leads, silver inevitably follows. With prices still elevated, high interest rates, and the mounting national debt, the present and future purchasing power and cost of living of everyday Americans is more and more uncertain. If you think that you may be falling short of your retirement goals, see the link in the video description to the free inflation and retirement calculator. To explore the subject of gold and silver, its past, present, and future role as money, a store of value, and a hedge against the weakening dollar, we will hear from economist, White House advisor, and author Jim Rickards, and economist and investor Keith Weiner.
Gold is a unique commodity, and I do think money has to be a commodity. Wenger talks about marketability. Gold is the most marketable commodity by far, with silver being a distant second and everything being distant third behind silver. Silver actually serves a different purpose than gold. So gold is great at carrying value over distance. There can't be a local glut in one market and a shortage in another, because most major places in the world are no more than a 24-hour plane trip to anywhere else in the world. Gold is actually pretty cheap to transport. Silver, if you look at the evolution in markets, there tends to be a winner-take-all dynamic. Silver is the most marketable in the small. That is, if you're a wage earner and you want to save 10% of your weekly wage, and look at that today. So that might mean somebody saving $50 a week today. Physical gold is very impractical in that size, because you're going to pay a gigantic premium to manufacture something with that precision to get down to that size. If you want $50 worth of silver, you're talking roughly 3 1-ounce coins worth. And so silver, you experience less losses if you're the wage earner trying to buy $50 worth of silver. And historically, that was always so. So silver is more marketable in the kind of quantities of somebody buying, with their weekly wage, or selling a little bit for groceries in their retirement. Something doesn't teleport from zero to ta-da, money, without skipping. Why would anybody have wanted to hoard it in the first place before it was money? It had some other value. And of course, silver is very shiny. It's a very interesting metal, and the ancients could recognize that. Gold, I suppose most of your audience would be familiar with actually holding a piece of gold. Gold is astonishingly heavy. It's so much heavier than it has any right to be. You hold a piece of lead or a piece of iron, let alone, the metals that other coins are made out of. It has such a reality to it that you can just imagine, apart from its unique color and the fact that it's shiny and malleable and all those other things, just the heaviness of it. There's an attraction to it that you want to lean forward when you see somebody have a piece of gold, that it still has that today.
It's a little bit like fire insurance on your house. You don't want your house to burn down, but heaven forbid if it does, you're sure glad you have the insurance. And when you write that premium check to the insurance company every month, you don't think you're throwing your money away, you think you're doing a smart thing. So get some gold, it's volatile, don't get too upset with the day-to-day price action. But institutional allocations are about 1.5%. So I'm recommending 10, so there's a long way to go there. People need to get a lot more gold. It has gone up about 600% or more since 1998, but I would see it sort of chugging along with a lot of volatility, and then I think we're getting close to the stage where it's just going to gap up, meaning one day it'll go up $100 an ounce and that'll make a lot of headlines, and the next day it'll go up another $100 an ounce and that'll make headlines, and all the talking heads on TV will go, oh, it's a bubble, don't be a fool, etc. But then the next day, boom, it keeps going. Then what happens is then people wake up and say, oh gee, I better get some gold.
Something doesn't teleport from zero to ta-da, money, without skipping. Why would anybody have wanted to hoard it in the first place before it was money? It had some other value. So the first gold coin, I think, was coined in the Kingdom of Lydia, which is now in Turkey, if I want to say, and that was around 600 and something BC, if I remember. So before that, they had alloys of gold and silver called electrum. They, of course, traded the metal in non-coin form. Coins make the metal more fungible because they're readily recognizable. The weights are standard. There's a hallmark on there that, nobody's going to be counterfeiting something with the king's mark on it, at the risk of having his head chopped off in those days. Gold is a unique commodity, and I do think money has to be a commodity. We're physical beings who live in a physical world, and there are certain times at which nothing less than I want final delivery of the goods. No electronic or paper representation or promise or receipt is good enough. I want to hold something in my hand and take it home and take my marbles out of the sandbox and go home. And so it has to be a physical commodity, and then of all the physical commodities, gold has been the one that's selected.
How do you hedge against an ever-depreciating fiat dollar? Own the opposite. Sound money. Sound money is built with assets that have scarcity, a long track record of trust and value, and cannot be printed by central banks. Policymakers, institutions, and governments may decide the fate of our currency. It is our responsibility to safeguard the wealth we have, because no one else is going to do it for us. If you are interested in protecting your retirement savings and preserving your purchasing power through a tax-deferred Gold IRA, see the links in the video description. To attend a free Gold Education webinar held by Augusta Precious Metals, see the link in the video description. Thank you for watching.